If you have someone who's tied to your financial outcomes, whether that's a business partner, maybe it's an investor, maybe it's a family member, if they're tied to you, how could that affect you financially if they were gone? What about how would it affect the business if you were gone? And I'm not talking about just death. We're talking about disability. We're talking about divorce. There's other things like when life happens that could affect this. So if you got someone in your life, like how would that actually affect you? Like, do you already know the answer?
Yeah, no, I'm thinking through all of my business partnerships and I actually don't know the answer. So, welcome to another episode of Wealthwise Banking. I'm your co-host, Jason Patrick, down here in the city beautiful, and my fellow Floridian, Jeremy Lee Huggins. How you doing, Huggins?
I'm doing well, man. Thanks.
Excited to be back on another episode with you. It's always a good time to come together, talk shop, talk about the exciting things that are going on in the world. So, what are we talking about today?
We are talking about risk, right? And we're not just talking about like outside risk.
Okay.
We've got a lot of members who are aspiring entrepreneurs, real estate investors, business owners, and a lot of them do a lot of great things to protect against litigation, lawsuits. But I'm finding in a lot of my discussions that not many of them protected their business from inside threats. They may not have protected their home front. Maybe they didn't protect their family. So that's what today's episode is about, is how you could be, one problem could potentially turn into three problems at a time of loss.
So it sounds like we're talking about being, if you're going to be the driver, you're going to be the engine, you're going to be an entrepreneur, you're going to go out, lead other people. You're talking about being a steward in your leadership to make sure that those around you are not going to suffer if you're not around. Is that kind of what I'm hearing?
That's it, man. Like, so you got people who set up entities and holding companies, LLCs, trying to figure out, oh, do I need a Wyoming LLC or a Delaware? And what are they doing? Why do they do that?
For protection, to limit risk.
Yeah, to limit risk, right? They want to protect their personal assets from outside threats. Like I said, bad actors, people who are going to sue them. They may end up throwing in some liability insurance, like, hey, we got attorneys for that. We got advisors for that. At the end of the day, they're trying to mitigate risk. But what a lot of people don't realize is they may not have fully protected themselves, or maybe perhaps on their journey to create financial freedom, that journey itself exposed them to unknown liabilities.
I love it. Every time you say risk, I don't know why, but I keep going to Lion King and Mufasa. I feel like risk. Ooh.
Yeah.
Right. I don't know why. I go to the hyenas for a moment. So, but then with this topic, it's interesting because we're really looking to transfer risk to someone else with everything that we teach. We're really to helping people take back control, to have guarantees. So this is a perfect topic for all of our builders out there.
Yeah. So, I mean, before we continue on, like, let's ask the community, if you have someone who's tied to your financial outcomes, whether that's a business partner, maybe it's an investor, maybe it's a family member, if they're tied to you, how could that affect you financially if they were gone? What about how would it affect the business if you were gone? And I'm not talking about just death. We're talking about disability. We're talking about divorce. There's other things like when life happens that could affect this. So if you got someone in your life, like how would that actually affect you? Like, do you already know the answer?
Yeah, no, I'm thinking through all of my business partnerships and I actually don't know the answer. So I'm excited to get into this with you and let's help our audience figure out what this might look like for them.
Yeah. So I have real estate investments. I do them with my business partner, Nathan. But let's say that something happened to myself, right? Or something happened to Nathan. From that point forward, what people don't realize is his ownership transfers. It's going to transfer to his wife. And the moment that ownership transfers, I just went from being in business with Nathan to being in business with his spouse. That might be different goals, different priorities, right? Well, what if Nathan's the primary breadwinner? Maybe the mortgage still has to get paid. Like there's other things where you might be getting a spouse who doesn't necessarily understand the business, doesn't understand the deal, or it could pass on to a child, right? A child who wants cash but doesn't really care about the business. Or for some of our members, they have trust. It could go to a trust that now owns part of your business, right? The business that you set up with someone else. It could pass on to a family member who doesn't really care about the long-term plans. Like there's all these different things that happen that if you might say, hey, I've got paper for that. I've got operating agreements. I got a plan in place. And we'll get to how just paper doesn't necessarily mean that it's actionable. But that's kind of the risk that I keep finding is people will have this this pursuit for generational wealth and financial freedom, but they didn't actually do a good job of planning for these contingencies.
That's one of the things I love most about you, brother, is the contingencies. I actually use it in conversation now with you and your military background, planning for contingencies, really looking at the what if this happens? Because we know, Jeremy, we know, and our listeners know there's one guarantee in life. And Jeremy, I know you know this by now.
Yeah, after 69 episodes, Chase.
See, you can be trained just like LV. So I knew we would get there, but you've trained me on contingencies. So let's go down this a little deeper. Let's talk about what happens, like the example you gave with Nathan, and now you're a partner with his spouse. Like what does that look like? How do you protect yourself from that risk?
Yeah, so if something happened, you typically end up with three problems, right? First, you lose the person and the role that they played in that business. Okay, so that was a decision maker, but those responsibilities they're still there. Just because the person is gone doesn't mean that the responsibilities disappeared. There's still debt, right? Maybe there's debt to investors. Maybe it's bank debt. You still have liabilities. You still have assets. All of that still continues even without you. So the decisions, they still have to get made, even in the absence of that person. So that's problem number one. You lose the person, like the person that was integral and key to the business. Number two, you got a money problem, dude. Right? So somebody has to get bought out. Maybe I don't want to do business with your spouse. Maybe I want to buy out her shares. Well, where's the money come from? Where's the money come from? Right? Does a family actually need the cash to continue paying the mortgage? Right? If they were the primary breadwinner, maybe they have tuition. They still have bills that are coming in, right? All of these are important things. If Nathan's gone, if you're gone, I may have to now not just buy someone out, they may need the capital fast to continue their day-to-day living. That business also needs time because if the capital's not there immediately, I may not have the ability to refinance. Well, what if it's a down market? I may not be able to sell an asset, right? I may not be able to finish a project by the time that family needs money. So somebody might want their shares today. That's another thing. These are all like things that we talk about that we have to talk about when we customize these. So one, we lose the person, we lose the decision maker. Two, we got a money problem. The third problem is that you actually do have an additional people problem. Okay. The people problem, now I got to get someone else involved. It might be the spouse, it might be a child, it might be a trustee that just inherited a new business partner. They may have different goals, they may have different priorities, they may have different expectations on how the business is being run. And that's where things start to get really hard, right? You're not just keeping the business moving. I lost my business partner, I lost my friend. I also just inherited additional responsibilities. And now I got to fill the gap. Usually there's a money issue. I got to find and manage brand new relationships. And I might be dealing with people who just aren't necessarily involved in the business. Like, be honest. If you're a business owner, how involved is your spouse, your children in your business? Is that just all business talk? Hey, take care of it. I don't want to think about it. Like, how involved are they? Because if they're not involved on a day-to-day basis, this is important for you, right? This gets real.
It's a complicated but essential topic. Like what you're bringing today is something a little different than how we talk about, but we're always talking about again, mitigating risk. That word, risk. What does it look like? What happens when one of your partners is gone? What happens? Like a reflection question for you is, can you see how one event in your world could could quickly turn into multiple decisions, like multiple outcomes that you didn't plan for?
For our listeners out there who like to watch TV, we saw this in the TV show Landman, right? When the oil baron passed away, and now his wife is running a multi-billion-dollar company.
Hmm.
And we also saw it in the comedy Tommy Boy. Remember when his dad passed away, and he took over Callahan Brakes, the company, and now he's got investors calling and employees not really they're unsure about what's going on. Those ownership shares and those responsibilities didn't disappear; they just transferred. That's all it was. But it's not funny when real life and money are now at jeopardy.
You think Tommy Boy, I can't stop thinking there's bees everywhere. Save yourself. That's all I'm thinking, brother. And I've never seen Landman, so I had to have you talk about that because I had no idea what that was about. So, but yes, you inherit and you saw Tommy took a while for him to be able to lead that company, Callahan Brakes. So
Yeah. So everyone's planning for these outside risks by setting up LLCs, they're setting up holding companies, they're working on their operating agreement. I mean, there's massive businesses out there that are literally just set up for LLC creation. but no one stops to pause to think about the threats that are close to home. And those are the ones that are actually going to hit you more emotionally. Like, what's more likely, right? What's more likely is that you pass away versus getting sued. So, why are you planning for these one offs and outside threats? Why do you concentrate on that more than you actually concentrate on the more realistic, the actual closer to home problems?
Well, I think one reason, if you're asking that as a general question to everybody to help people understand this, but one because that's the system we play in. The system isn't to benefit us necessarily, right? The system is not to help our thinking about looking and mitigating these risks and the things that you're talking about. So let's talk about the one that, we came in where you said, hey, the deals look simple until they're not.
Yeah. So I've got a deal I'm working on in Savannah, Georgia. Right. That's where a lot of my real estate's at. Again, it was an owner finance deal. I bought it from two brothers. So there was one note payment and then everything was fine. This is like super simple. And in fact, my contract was one page. Okay. One of the brothers passed away and his interests, where did it go? It went to his son. So I've
Mm.
got two brothers, one passes away. The son now inherits half of the business. That son or the nephew, right, now has different priorities than his uncle. He has a different mindset. He has a different understanding of what investing is. And what should have been an easy, clean payment. So, this is how it now affects me. You might think that's a one off weird family problem, but now I have to go and figure out how to pay two separate people because they can't even agree on how to freaking get paid. Jason, think of how silly that is. These people do not get along so much that they can't even figure out how to get paid together. So that didn't just create a mess for their family, it created a drag for me. I have uncertainty in the deal. The uncle and I were talking about extending the note. We're looking at refinance options, different exits. So I, as the investor, am being affected by this internal family problem because they did not adequately prepare.
And if that happens in something that's simple, imagine what that looks like if it's more complex. If you got a bigger family or a bigger deal with more people involved, then what happens?
Yeah, like what if there were employees? To your point, right? So if there were employees, if I was running a bigger business, I mean, let's say I had a nail salon, right? People that are relying on me, and then boom, I've got him now as a co-owner of the company. How's that affect the business? How does that affect those lives and the food that we're trying to put on other people's table?
It's very specific. I didn't realize you're a big fan of getting your nails done, Jeremy. Is that a new thing?
Man, everyone likes to get their feet rubbed.
I do not. I have ticklish feet. Do not touch my feet. Patty keeps getting disappointed because she thinks that we're gonna go and get pedicures together. She's like, "Oh yeah, you don't like?" No, I'm like, "I'll kick the lady in the face by accident. I can't do that." So,
No, fair enough, fair enough. But we're getting kind of back on track here. The one rebuttal that I do get a lot is, "Hey, Jeremy, we actually did plan for that. We've got an operating agreement. We've got documents, right? We've got these entities, the holding companies that we talked about. Our attorney already took care of this." And I agree, like you should have documents. I'm not saying that that's not important. You should be preparing for outside threats, but those agreements, they don't create the money, right? They don't create time. Those agreements, they don't create calm when your investors are now calling your family. Because if you're the one that was gone, guess what? Your family now just inherited the business. What you thought was creating financial freedom for them just became a financial and emotional drag for them, for your family. So you, again, your family may not be able to refinance. Now they're fielding calls from investors talking about bank debts, liabilities that you owed, that you signed up for, and your ownership and those responsibilities just transferred to someone else because, correct, you had an operating agreement. But what you didn't do is you didn't structure for actual capital to show up when you needed it, right? The operating agreement, it spells out what should happen. And people assume that they're prepared. But then to your point, life shows up. And that decision now forces a decision for your family that they may have never wanted to make. And that's where people have this false confidence. Hey, I've got an operating agreement. I've got this taken care of. I should be able to do something. It's not the same thing as I'm capable of doing this.
hmm. So for anyone listening and thinking about what Jeremy just shared, here's a question for you to reflect on this. If your current structure got tested this month, would your people have good options or just documents?
Yeah. Yeah, I mean, that is a good question. How's it work for you? I mean, are you starting to see maybe where you might be exposed in your own business?
Are you asking me?
Yeah, I'm asking you.
No, yes and no. Yes and no. It's a lot to think through. Like I said at the beginning, we came to do the show notes together and kind of talk about what we're talking about. I what I would share is you're always looking to mitigate risk. There was a great quote from a book called Economic Model that basically says if someone can take something from you, whether it's you don't have car insurance, home insurance, renter's insurance, whatever, life insurance, if somebody can take something from you, then is it really yours?
Mm,
And so that's how I'm kind of, that's the prism I'm looking at this with, Jeremy, because I think about our partnership, right? I think about my partnership with my wife. I think about other partnerships I have in business, other agreements I have, and I'm thinking like, how clear are they defined? Like, what happens when the driver disappears, right? Are there contingencies? So I don't have an answer for you yet, but I'm glad that you got me thinking about it and helping me lead our folks through this as well. So.
yeah, I mean, because if something happened to you, now you've got Patty and the boys that are picking up right where you left off. And if they're not intimately familiar with the business, what happens? The deals don't stop, the obligations don't stop, the bills still have to get paid, right? Everything's still there. The banks want their money, right? The bills are coming in, the tuition has to get paid. You just transfer those responsibilities to someone else. It could be your kids, it could be your spouse.
Well, when it comes to that, like if I'm gone, like I've graduated, I've died, I know they're okay. I know we have the systems and processes in place. I know there's more to do still. We're still building some of those contingencies. We still have some work to do that has me a little exposed. But like this is what we talk about in our retreats and our different things, and they would have the money to cover everything and be okay to get back on their feet. Now, to your point, would they know how to run the business, some of the obligations, other things? I don't know,
Would
actually.
they even care to run the business, right? Like if you were,
I think Connor
I'm not
could. Like
talking about,
if someone's gonna run it, I'm gonna let Connor at 11 years old run it. So I'm gonna have him go ahead and do it. That's
but for a lot of our listeners out there, they may be in real estate and doing syndications. They may be raising money. Okay. Like these are bigger things. Like you have a family run business. You run your money meetings with your spouse. Like you're further ahead than the average listener. Most people, they may have to sell an asset and they may have to do it too quickly, which boom, what's that do? Triggers taxes. Or maybe they have to adjust terms. Someone's predatory. They're coming at them and they're taking things on and agreeing to certain obligations that might jeopardize the entire business. It might destroy everything that you've been building for years. It might be tapping retirement accounts that you plan for later to support your family later in life. Those things that you spent years building, like literally could disappear and be torn apart overnight if you're not prepared. And that's what I want people to think of. Like you're doing all this great work to protect against outside debtors and creditors and people suing you. But what have you actually done to stop and prepare for the inevitable? And how have you transferred that risk to someone else, not to your family?
Yeah, we talked to a lot of business owners, right? And you see how exposed they are. I talked to a lot of folks who don't have basic protection. And we're not talking about complicated, the different things we've covered between your multifamily investments and different things and complex business. And we're talking about simple. We're talking about just LLCs and solopreneurs, right? And our S corps. We're talking about smaller businesses. Does everybody okay if you're no longer there? Like, are they covered?
Mm-hmm. Yeah. So how do we do it? How to like? There is a process for it. Okay. Like if someone wanted to handle this like a pro and not leave a massive mess behind, like what are the three things you got to do? Right. Like,
Yeah, first, clear path, right? First, clear path. You got to have an idea of what you're trying to do. Second, you want to make sure the money that's going to be needed is available right away.
mhm.
And go ahead, take it from there. So the money's available, you got a clear path, you got money available. So that's
And
two
then
things, the three things you talked about. So what
and
else?
then time, right? You need time to be able to actually make these decisions because that's what people are trying to create at the end of the day. And the money gives you that breathing room. It's not being your business doesn't suffocate and you're not transferring that risk and those obligations to people who may not necessarily be prepared or worst case, they're just not interested. And if you set this up correctly, what it does for your family, for your partners and your investors, that creates peace of mind, right? Your spouse now has money to be able to pay bills, to care for your kids. Your partner has a way out to buy out other people from the partnership so they're not taking on unwanted partners. That's that key person stuff that we talk about. Your investors, they're no longer wondering what happens to their money, their future, their family. And while you're alive, this is the cool thing, the way that we structure it for living benefits, you still build cash value That cash value of we talked about in previous episodes, it can be used for urgencies, emergencies, and opportunities. So if an opportunity comes along for business expansion, you can tap the policy. You're not tapping a line of credit. You're not tapping credit cards and taking a high interest debt, right? You're not going to the bank and begging and borrowing. Like this structured is not just for afterlife, it's living benefits, it's during life. Like that's what we want to maximize. This is a both and asset.
And we're, by the way, if you didn't hear it, we're talking about whole life. We're talking about specially engineered whole life. That's giving you both all the living benefits that Jeremy just covered, as well as it's really that tax-free, probate-free asset that when you're gone, everything's covered. Everything's covered. You know what's going to happen, just as long as you're leaving those instructions too.
Yeah. So the process that we like to implement, very simple. Write it, legalize it, fund it. What does that mean? Okay, write it. People around you actually know what the plan is going to be. That's simple. That's clear. That's direct. What are your values? What are your priorities? What's the plan? What's the succession plan? Legalize it. Now we're putting the papers, a lot of the things that you already had in place, right? Those are the operating agreements. That might be the trust. That might be directing, like what happens next. And then the funded piece. The funded is where the capital shows up. It's what makes sure everything is there for time to relieve pressure, to provide clarity and peace of mind. For a lot of the folks that say, oh, I'll deal with that when I'm bigger, when I actually have bigger responsibilities. Right now, you mentioned a word earlier. I'm a solopreneur. If you are a small business owner, this matters even more because everything relies on you. You don't have the staff, the assistants, the people in place. Like the smaller you are, actually the harder this hits your family. So that's why it's important to start early and then you build a plan that grows with you over time. The more small you are, the earlier in your stages, the more exposed you are.
Yeah, that I like that. It's profound, right? The smaller you are, the more you're a rugged entrepreneur, the more you're doing everything, the more exposed you are because you don't have those who's in the life that are going to pick up the business, keep the business running, keep operations going. So you want to make sure that you have a plan in place that's going to protect everything, not just your family, but everything that you've built.
Yep, yep. Because the paper helps. All your entities, your operating agreements, all that helps. But the pressure, when that shows up, that's going to tell the truth on how prepared you actually are. And that time that you need, that's going to be the peace of mind. That's what's going to promote clarity. Because at the end of the day, you want your people, your employees, your family, you want them to inherit clarity, not confusion. And that's something that you should really think about. Do I have a place? Did I write it? Did I write down my plan? Do people know what happens next? Do I legalize it? Do I have the proper entities and structures? Did I properly fund it? A lot of people have pieces and parts of this. Not many people have all three working at the same time. And that's what we do here at Wealthwise Banking. Like we'll help you write it, legalize it, fund it. That is the three-step process that we go through. It's for, like I said, if you're just starting out, this is more important now than it could ever be.
And you might be thinking, like Jeremy, just something you might be thinking, well, it's too early. I'm going to do it later. Guess what? Later's not guaranteed. That's the point of having this conversation, understanding right now what you can do. Jeremy, you shared earlier today, you talked to someone who thought they couldn't do this right now. And then by the end of the call, you helped them do exactly what you're talking about.
Yeah, it was literally in a little over 20 minutes. The guy, he showed up. He's in his 50s. I'm not going to, give too many details, but long story short, lots of debt. Didn't think that he was going to be able to fund a policy, just knew that he needed help. We figured out where his money was going because, again, he had a money patterns problem, not a money problem. He had a money
Yes.
patterns. And some of those patterns we could just reallocate and change into a policy to help snowball the debt pay down by providing protection, right, for the family in the event of his loss, and then help him actually build a structure that grows with his business. We literally did that in just over 20 minutes. The process, Jason and I have done this so often, we see the same patterns over and over again. So
Oh my
don't think that
God.
it's
The
complex.
Yeah, what you're talking about right now, it's hitting so hard because it's a reflection of the calls I've had this week, the thousands of calls I had over time. And the more I see it, the harder it is to not see it, right? Like you see the pattern because you can feel the energy. I can tell you that guy that you talked to, he felt worried, he felt stressed. If you would have asked him like, "Hey, how would you feel if you were right here 3 years from now?" He would have said, it feels awful, Jeremy. I don't want to be here anymore. And what he wasn't shifting, it wasn't that he didn't have the ability to change it. He needed someone to show him a different perspective, a different system that would work for him versus him working for the system.
Yep. And again, we see the same patterns, but every one of these plans is customized to you. And that's the important part. That's why we have to have the individual conversation. So if you think that this is complex, guess what? There's nothing that we haven't seen yet. Maybe there are, but as of today, we've seen so many of these patterns that it's easy to identify the patterns. And that's what's cool about being in the business and doing thousands of calls so far. We can take what you think is complex and make it so simple. All you got to do is go to wealthwisebanking.com. If you're looking for ownership, if you're looking for money, if you're looking for more control in your life, go to wealthwisebanking.com and end up just booking a call with one of the two of us. We'll at least tell you and validate your plan as a worst case. Hey, I just want someone to look at what I have. Like, look at my pieces and parts. Tell me if I'm okay. And if you are, we'll tell you. If you're not, we're going to tell you where in the process, write it, legalize it, fund it. Where could you actually do a little bit better?
That's the whole point, right? So go to wealthwisebanking.com. If this resonates with you, don't put this off to tomorrow. The longer you wait, the more expensive that waiting becomes,
Not just financially, emotionally as well.
emotionally as well. So, Jeremy, you're already in banking.
You're just not the banker yet. So go to wealthwisebanking.com. We'll get you started.
All right, everyone. See you on the next episode. Be blessed. Thanks for joining us on Wealthwise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.